Good evening, members and the people present here. On behalf of SIRC of ICAI, it is my pleasure to welcome you all to this insightful session on Ready, Set, Comply, Mastering Year-End GST and Income Tax Compliances. I request CA Subramanian sir to please occupy the dais. So we are starting the session with ICAI motto song. I request you all to stand for the ICAI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैत 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 एतद्वैत.
Thank you. CA Subramanian is a BSc graduate FCA, ACMA and a law graduate practicing as a chartered accountant since 1996. He has over 25 years of in-depth professional experience in direct tax and indirect tax practice. His area of specialization includes income tax, GST, central excise, central sales tax and state VAT. He has delivered presentations in over 1,000 orientation seminars on GST. He also has the unique distinction having trained government and private sector employees on GST. CA Subramanian regularly appears before all direct and indirect tax authorities, including CIT, CIT appeals, ITAT, CESTAT and VAT tribunals. He also trains GST officials of state and central government. He is also an approved valuer accredited to IBBI. CA Subramanian regularly addresses members and students in seminars, study circle meetings conducted under the auspices of Institute of Chartered Accountants of India, Institute of Cost Accountants of India and Institute of Company Secretaries of India, besides members of various chambers of commerce, associations and other bodies representing trade and industry. He has been selected as a GST faculty for the Institute of Chartered Accountants of India by the Indirect Tax Committee. He has contributed to the preparation and publication of Technical Guide on Annual Return and GST Audit brought out by Institute of Chartered Accountants of India. We are fortunate to have you with us today, sir. On behalf of SIRC ICAI, I thank you for accepting our invitation and taking time to be with us today. So he will be taking the year-end GST compliances. Welcome you, sir.
Good evening. At the outset, I am thankful to the SIRC chairman for giving me an opportunity and my co-speaker, my Guru TG Suresh. Today the topic is compliances while finalizing the books of accounts. What we have to verify, whether it will have impact on GST or not. So that we are going to discuss. So if you see the balance sheets or if you see the P&L account, then each and every item will have some impact on the GST. Earlier, what we will do, we will look only in the credit side, whether the turnover is tally or not. But under the GST law, you have to see not only the credit side, the profit and loss account or balance sheets, you have to also look into the debit side of the balance sheet also. So what do you mean by that compliances or compliance, what we have to do. So immediately, we will come to the conclusion, sir, compliance means reconciliation. We have to do a lot of reconciliations, correct? But how to reduce that reconciliation? That is very important. Normally what we will do, year end we will not concentrate, sir, year end, okay sir, no problem. We will see in the annual return. But when it comes for annual return, then you have to do lot of reconciliations. Your GSTR1, GSTR3 will not tally. Your GSTR1, your books will not tally. Your GSTR1 will not tally with the GSTR3, GSTR3 will not tally with your books of accounts. So at the year end we will annual return up and so we will verify, sir, what we have to do. So before 31st March itself, what you will do, first you check it up, what is your outward supply, whether it is at least tally with your GSTR3 up to February 2025. If it is not tallying, then you find out what is the reason. Suppose you would have filed wrongly GSTR1, it may happen, or GSTR3. Accordingly, you please adjust it in the month of March 2025 return, so that one reconciliations will not be there. Normally what we will concentrate only at the year end, saying that, sir, after finalization of accounts or at the time of audit, we will verify with the GSTR 9 or 9B. So therefore, first you have to reduce the reconciliation. One is in respect of outward supply, no doubt. At least you come to one conclusion whether your GSTR 3B is correct or 1 is correct or books of accounts is correct. So therefore, that is very important. Even at the time of audit, I don't know whether it is GSTR 1 is correct, 3B is correct or books is correct. Even at the time of filing an annual return also. So therefore, at least before 31st March you do this. So therefore, at least your outward supply will tally with your books of accounts, and accordingly you make an adjustment in the month of March 2025 return. Then there are a lot of reversals happened during the year. Reversals happened in the return but not in the books of accounts. There are certain credit you have taken. Say for example, while purchasing the motor vehicle, you have taken the credit for rupees, say for example 1 crore, 28% tax, 1 crore 28 lakh rupees. You have capitalized 1 crore 28 lakhs in the books of accounts. In the month of February or January, you came to know, no sir, this is not an eligible credit. This is a credit under section 17(5), it is a blocked one. Therefore, I am reversing in the return. You reverse in the return, but there it is not being properly done. So therefore, you have to verify whether each and every aspect, whether the reversal is properly done, whether it is as per books of accounts, whether it is tally with your financial statements. In sometimes what will happen, if you see your fixed asset, each and every aspect we will examine. So if you see the fixed assets, there will be a deletions. Once there is a deletion, so then you have to find out, is there any sale of assets? What is the reason for deletions? Sometimes what will happen, it may not be a sale at all. It may not be a sale at all. So therefore, you have to verify if there is any deletion in your fixed assets. Then in such a situation, you have to find out. You have to find out what is the asset, what they have sold, what is the rate of tax. That is very important. So therefore, whether the rate of tax is 28% or whether it is 18%, and accordingly you have to discharge the tax. In respect of motor vehicle, what happens? Say suppose if the assessee purchased a motor vehicle and in 2020 and now he is selling in 2025, and there is a deletion in fixed assets and as well as profit on sale of fixed assets. Then in such a situation, what is the GST implications that you have to find out? What would be the GST implication? Definitely on the sales he is liable to pay tax. Yes or no? Yes. At what rate? I recognize the presence of the SIRC chairman Ravadi Raghunandan madam. Yes madam, welcome. Yes. So you know what is the, so you should find out what is the rate of tax. What is the rate of tax for the sale of a motor vehicle? The sale of motor vehicle is purchased in 2020 and sold in 2025. In 31st March 2025, in the balance sheet there is a deletion of asset, and in the P&L account there is profit on sale of vehicle. What would be the rate of tax? Yes. Whether it is 28%, 18%, 12%? Any idea? 28%. Yes, sir? Huh? Inna, sir? Vehicle CC, yes. Then any other? Say if you go through notification number 8/2028, if my remembrance is right, dated 25/1/2018, for the second hand motor vehicle, the rate of tax is reduced from 28 to 18%. So therefore, you have to discharge the tax at the rate of 18%. You have to discharge the tax at the rate of 18%. On what value? On the sale value. So you have to arrive the sale value, but in your fixed asset there will be a deletion, that will be a totally different value, and the profit on sale of assets, that will be the different value, but you have to find out what is your sale value, and accordingly you have to discharge a liability. Then in such a situation, what will happen? Your GSTR 1 or GSTR 3B turnover will be more compared to your profit and loss account and balance sheet. Yes or no? Yes or no? So therefore I sold the asset for 1 lakh, whereas profit on sale of asset in my profit and loss account will be only 50,000 rupees, and there is a deletion in my fixed asset schedules. But this will not tally. So therefore there will be one reconciliation. Officer will ask, no, profit on sale of asset is this much, but you have paid very less value. So therefore you should have another one reconciliations. That is very important. So therefore each and every item, then say for example, take your current liabilities. Current liabilities, there is an advance receipt from the customers for 1 crore. What do you feel, sir? What do you infer from that? Advance received from customer 1 crore in the current liabilities. A GST impact on?
If it is goods
at
the point of sale.
Correct.
It is a service and type of thing.
Right. So therefore, if it is a goods, I am not liable to pay because time of supply talks about only at the time of issuing the invoices. But in respect of services, I received 1 crore advance from customer. Therefore, immediately you have to verify whether the person is discharged the GST on that advances or not. Yes or no? Yes. So therefore, you have to discharge the GST on the advances. Then what will happen? Your tax payment will be more. Your turnover will also be more in your GSTR 3B and GSTR 1. But correspondingly, there won't be any corresponding outward supply in your GSTR, in your profit and loss account, but in your return there will be a tax liability. So therefore, this also require a reconciliations. So therefore, your tax paid will be more. Yes or no? Yes. And accordingly, you have to have another one reconciliation statements. So therefore, what we have to do is, before 31st March, first you have to examine whether my outward supply is tally with my books of accounts or GSTR 3B or GSTR 1. If not, then you reduce one reconciliation, and then find out your income tax, input tax credit also. Your input tax credit, first you have to examine whether you claimed the credit after satisfying all the conditions stipulated in section 16. Yes or no? So sometimes what will happen, you would have not taken certain credit, but it appeared in 2B, but you have not taken at all. Correct. Then 31st March, you have to decide whether you want to take the credit or not. If you want to take the credit, you take it in the month of March 2025. If you take in April, then what will happen? April also you are eligible. You can take up to 30th November 2025, no doubt about it. But you should have another one reconciliations. Correct? What are all the ITC you have claimed for this year, and what are all the ITC you have claimed for this year, but you have claimed in the next financial years. Related to this year only, but you are claimed in the next financial year. Accordingly, you have to fill it up your GSTR 9 and GSTR 9C. So it is additional work. So therefore, what you have to do, you have to reduce your reconciliations to the extent possible in the month of March 2025. Then in number of cases, what will happen? E-invoice applicability. So E-invoice applicability, this year you have to examine. In one case, what happened? This year, the turnover exceeds 5 crores. So therefore, E-invoice is applicable from 1/10/2023 if your aggregate turnover exceeds 5 crores. Suppose if your clients company turnover, aggregate turnover exceeds 5 crores this year, then you have to immediately, you have to advise them, sir, from April 1, 2025 onwards, you have to start e-invoicing. Yes or no? E-invoicing. So therefore, e-invoicing applicability also that you have to examine. And then you come to the profit and loss account debit side. Normally we will not look into the debit side while finalizing the GST perspectives. But today it is not so. You have to go through the entire profit and loss account. Particularly, you have to go through the debit in the profit and loss accounts. So in the debit side, if there is any RCM liability that you have to examine, say for example, transport charges or legal expenses paid or payment made to the independent directors. So these are all subject to RCM. But if you verify up to February 2025, if you have not discharged a liability, what I will suggest to you, please work out your liability under RCM and take the credit also in the month of March, correct? So therefore, another one reconciliations you are reducing it. So otherwise, if you take it in the next month, in April 2025, again as I told you that you have to prepare the reconciliation statements. So in respect of legal expenses, no doubt the advocate or legal firm, they are not subject to pay the tax on the outward supply. But as a recipient, I am the recipient of supply of goods or services, I am the business units, so therefore I am liable to pay or discharge a liability under the reverse charge mechanism. So in such situations, once I paid under the reverse charge mechanism, then I have to also examine whether I am eligible to claim the credit or not. Yes, whether I am eligible to claim the credit or not. If I am eligible to take the credit, sir, I have seen my financials from April 2024 to March to February 2025. There are lot of expenditure on which I am liable to pay under RCM. Yes, then in such situations, what you will do in the month of March, you pay it. According to me, you have to pay each and every month, no doubt about it. When you are raising a self invoice, at least you make the payment in the month of March 2025 and take the credits. So therefore, this will not be form part of your Form 9 reconciliations or year-end reconciliations. Yes. So therefore, your RCM liability will tally with your GSTR 3B and GSTR 1. That also will tally with your books of accounts. That also will tally with your GSTR 1 and GSTR 9C. So therefore, there won't be any issues at all. The next important is, all we know that up to 3 crores turnover, if you discharge the tax at the rate of 8% or 6%, you are not required to maintain the books of accounts. Yes? Yes. But there are a lot of legal payment is made by that entity. Say for example, the company turnover is 2 crores. They have discharged the tax under the Income Tax Act, under section 44 AD at the rate of 8%. They are very happy, that's all. But there are lot of legal payment is made, there are lot of legal fees is paid by the firm to the advocates. Then in such situations, whether the firm is liable to pay under RCM, yes or no? Yes or no? Yes sir, any view? See, according to the income tax only this 8% is applicable. According to the GST law, if there is any inward supply of goods or services, then you have to pay under the RCM. Sometimes what will happen in 44 AD AE cases, sometimes what will happen, the outward supply under the GST law may be 2.50 crores, but under the income tax law, it may be 1.98 crores. Is it possible? Yes or no? We will have like interactive sessions. Yes or no? The question is, under section 44 AD, as per GST return, the turnover is 2.50 crores. But as per books of accounts and as per income tax return, it is only 1.90 crores. Same system is being followed. Only mercantile system, that's all. No cash, no mercantile. In both GST and income tax law, for a moment, we assume that it is only mercantile system of accounting. the officer send you notice saying that, income tax officer sends you notice saying that your turnover as per GST law is 2.50 crores, whereas as per your profit and loss account it is 1.89 crores. The balance 60 crores I wanted to bring it under the income tax. Due to rent. It is not, no rental income, sir. No rental income, no other income for a moment.
GST purpose,
Yes, Bhaskar, sir.
turnover includes GST collection also.
It is not related to tax, sir. The turnover doesn't include.
Accounting could be
Huh?
different. Income method of accounting could be different.
Income method of accounting. 44 AD. It is not income method of accounting, sir. You are talking about revenue recognition, that correct? As per accounting standard.
Whatever they is 7.
That's all. As per accounting standard, the company may recognize the revenue, but as per GST law, the revenue may be less. But here, GST revenue is more. My books of account is less. Huh? Sale of fixed assets. It is not sale. I am talking about only the turnover. Turnover difference. I am talking about only the turnover difference.
Output services.
Output services. Yes.
Government grants.
Government grants, it is not a supply at all. There is no quid pro quo. There is no consideration at all. So therefore the question of GST is not applicable for government grants. Why there is a difference? Your books of account is less. Your GST return is more. But the dealer is filing the return under the income tax law under section 44 AD and he discharged the tax liability.
Stock transfer.
Yes, excellent. Yes, sir. Stock transfer. Say, sometimes it is possible they may have two GST number. But GST law as per schedule 1 and according to section 7, it says that any transaction between two distinct persons is a supply even without a consideration. Yes or no? So therefore, what will happen? There may be a sale between the two units. There may be some stock transfer between the two units. But that is subject to GST. That is an outward supply. Hence, that the GSTR 1 and 3B is more, and as per IT it is less. So therefore, you have to prepare the reconciliations. Otherwise, here the GST officer will be very happy, because according to the GST officer, compared to books of accounts or compared to balance sheet or profit and loss account, his turnover is more, he will be very happy. But sometimes the income tax officer, he starts sending the notice. Nowadays, the income tax officer first he is verifying only GSTR 1 and GSTR 3B return. So if you say that no sir, my turnover is as per GSTR 1 and GSTR 3B return is this, then in such situations, no doubt, you should have a clear reconciliation statement so that you can avoid. The next very important is other income. What is the other income? Other income which you have to verify. What is the other income? Other income consists of only interest on fixed deposits. Interest on fixed deposit. Whether that interest on fixed deposit is subject to GST? No. So therefore it is an exempt supply. Whether you have filed in your GSTR 1 or GSTR 3B, it is an exempt supply. Yes. At the year end, what will happen? At the year end, while finalizing the books of accounts, you will enter, no sir, I have fixed deposit of 1 crore at the rate of 6%, 6 lakh rupees my interest from fixed deposit. Yes. But have you entered this transaction in your GSTR 3B or GSTR 1? Then what you have to do? If possible in the month of March itself, because you know almost correct, you enter this as an exempt supply in your GSTR 1 and GSTR 3B, so that another reconciliations will go out. Otherwise, what will happen? At the time of filing annual return, what you will do? Sir, my income is as per profit and loss account is this much, my outward supply is this much. Other income, you have to show it as a exempt income in your GSTR 9 return, correct? And then you have to reconcile. Yes. So therefore, yes sir. Yes, I will come to that. Yes sir. 43, 44 reversal will come. Sir, according to me, if you go through the section, particularly if you go through rule 43, rule 43 says, in respect of interest, no reversal is required. Yes sir. In respect of this one, another one is sale of scripts, correct? So for these two items, no reversal is required, sir. Yes, so therefore you are not required to reverse. Yes, but you have to show it. So if you declare it in the month of March, then there won't be any issues at all for you while filing your GSTR 9 or GSTR 9C. The next very important is rental income in your profit and loss account credit side. Rental income. What you will do? What you will examine? Sir, you have more interactive sessions. You please respond.
From commercial or
First you will examine whether it is commercial or residential. If it is residential, exempt. And you know the rental income, correct? Every month you know the rental income. Whether you have shown your GSTR 1 and GSTR 3, this rental income as exempt? Yes or no?
has to be.
It has to be. You have to declare it, correct? Then only almost your financials and GSTR 1 and GSTR 3B will tally. It's very easy for you to prepare your GSTR 9 return. Or otherwise in your GSTR 9C you have to give all the stories. Yes or no? Suppose if it is a yes sir. Rental income you have to reverse it. I will come to that, sir. Rental income you have to reverse it. Provided you have taken a common credit, correct? If you have taken the common input as credit, then in such a situation the reversal is required. Otherwise it is not required. You are not at all taken. There are certain dealers, they won't take the common credit at all. In such a situation, no reversal is required. You can take a stand saying that no common credit has been taken, so therefore no reversal is required. I will come to that, sir. So, suppose if it is a commercial rent, what will happen? Commercial rent. Commercial rent, it is a outward supply, correct? On which whether you have discharged the GST, yes or no. So that you have to examine. If you have not discharged, discharge it, pay it in the month of March and close it. Correct. Now we will come to the debit side again. Debit side, rent paid is there. Rent paid 12 lakh is there. Rent paid 12 lakhs. It is a residential dwelling unit. Yes, it is a resident. After that, you will go for commercial. There is a rent paid. It is a residential dwelling units. I am the registered person. Say for example, XYZ Limited. I am the XYZ Limited. I am the registered person. I paid rent to the tenant. The employee, they occupied the premises. In such situations, what will happen? RCM liability. I will come to that. So, in respect of residential dwelling unit, that is very important. Residential dwelling unit, yes, you are liable to pay under RCM. Yes, you are liable to pay under RCM. Once you paid under RCM, can you take the credit? Yes or no? Whether you are eligible to claim the credit? Yes? Or no, sir, it is related to the employee, personal consumption of the employee. Therefore, section 17(5) restrict me not to claim the credit. Say, according to me, you are eligible to claim the credit because it is incurred only for the purpose of a business and it is not being a blocked item under section 17(5). So, therefore, according to me, you are eligible to claim the credit. So, the first question is, rent is paid, is a owner is a unregistered person and the company is a registered under the GST law. Now you take a stand saying that RCM is applicable. Correct, sir? Yes. Now the next question is same residential, but the owner is registered. Please be with me. The owner is registered and the company who is availing that services, the company is also registered. The company is also registered. Now whether RCM is applicable or not.
Provided he has raised the invoice.
He has raised invoice, no doubt. He is a registered person.
No, with paying the rent itself, they will pay the GST along with the rent.
Who?
No,
Okay. But you are all very clear, no? It is only a renting of a residential premises. renting of your residential premises, is it taxable or not first? Not. Then? Why RCM? It is not taxable. Once it is taxable, then only RCM will come.
But it is used for business now.
So therefore, if you go through the notification number 12/2017, it says renting of residential premises is exempt except renting to the registered person. Okay? So therefore, renting of residential premises is exempt, no doubt about it. But if it is let it out to the registered person, then it is not exempt. Then it is not exempt. Yes? So therefore, here the landowner, he is a registered person. Yes? The landowner is registered, the company is also registered. Yes or no? Yes. Now there is an outward supply from the owner to the company. Correct? Now the question is whether RCM is applicable or not. Owner is registered, be with me, owner is registered and the company is also registered. Owner is letting out the property to the company.
After time of paying the rent itself, 18% GST is also there is no necessity for RCM.
At the time of?
Paying the rent, 18% GST is also paid.
No. For the owner, it is an outward supply. For the owner, it is an outward supply. Correct. Owner is an outward supply, residential premises. Correct. But if you come to the taxability, it says renting of residence is normally exempt except to registered person. So here he is giving to the registered person. Yes or no? He is giving to the registered person. So therefore RCM says if it is to the registered person, then RCM is applicable. Yes or no? Got the point? Or I am confusing? So therefore normally renting of your residential premises is totally exempted. But if it is given to the registered person, then RCM is applicable. Now XYZ Limited, they have to discharge the GST under the RCM because they are the registered person. Yes or no? Yes. First is unregistered. What will happen? Unregistered to registered, then also RCM. Registered to registered is also RCM. Because if you go through the notification number 13/2017, it says any person renting of residential dwelling unit by any person to the registered person. So therefore it talks about any person. After that I will come for commercial property. I don't want to confuse you. First we will get clarity in residential dwelling and then we will go for a commercial property. So therefore notification number 13/2017 serial number 5A, it says renting of residential dwelling unit, very important, to a registered person by any person to the registered person is subject to RCM. So therefore the registered person is liable to pay under RCM. Suppose in my example, owner is also unregistered. XYZ limit is also unregistered. Then what will happen? Whether forward or RCM? It is only a renting of residential dwelling unit. Yes? Any idea? No GST at all. Both they are unregistered, correct? No GST at all. Now the question is, the business unit is unregistered. Be with me. The business XYZ Limited is unregistered, owner is registered. One is forward charge. Any other view? Yes, sir. So according to me, the tenant is unregistered. If he is registered, then only RCM applicable. Correct? He is not registered. Therefore, forward charge is applicable. So therefore, in the hands of the owner, it is letting out of a residential premises, not to the registered person. So to unregistered person, therefore it is an exempted. Therefore you can claim notification number 12/2017, exemption notification, which you can claim. Yes, sir? Yes. So therefore you have to verify whether the rent is paid only for a residential dwelling unit or commercial units. If it is a residential dwelling unit, even if the owner is registered, RCM is applicable. Even owner is registered, RCM is applicable. Even if the owner is not registered, even in such a situations, RCM is applicable. Then there are certain issues. Sir, it is only the residential property. The property is only the residential property. But I am using it commercially. Sir, my EB is commercial. My water tax, everything is commercial. Whether it is a residential unit or commercial unit, that is a question next. Yes, sir. Then you will go for commercial property.
Dwelling purpose only should not be.
RCM is not.
No, you are talking about whether it is liable for.
No, whether it is, first we will examine whether it is a residential or commercial. Once it is residential, you know the answer. Once it is commercial also, you know the answer. Whether it is a residential property or commercial property. Sir, in my office also, the flat is owned by me. No electricity, everything is commercial. Property tax, everything is commercial. So whether it is a commercial property or it is a residential property. If it is a residential property, then my firm, Subramanian Associate firm, they are paying rent to me. Correct. I am the owner. Subramanian Associate is a registered person. Correct. Then if it is a residential unit, Subramanian Associate is liable to pay under RCM. Yes or no? Even I am unregistered. Registered also in respect of residential unit, RCM is applicable. Now the question is, the property is a residential dwelling, but for the purpose of electricity, property tax, this everything is commercialized. In such a situations, what stand will you take? Whether you will take a residential property or commercial property.
Now, what purpose it has been put to use?
You put to use only for commercial purpose.
No. If it is used for residential purpose.
It is a residential flat only for I am using it for my office. I am using it for my office. Correct. So EB, everything is I am paying commercial rate.
And used for commercial purpose.
Yes, used for commercial purpose. Yes. Any other view, sir? Vishwanathan, sir?
Building appurtenant thereto because that is the TG Income Tax Act. Even though the residential is before proposed, we can take.
Land appurtenant that too. Okay. Yes, correct. That was clarified, and then exemption was also given through notification number 12/2017.
So in that case, it was used for the commercial purposes, but it's a residential property.
Yes. Any other view, sir? Sir, according to me, I am taking the view it is a residential premises, because the approval from the concerned authority is only residential. If you go to the CMD authority, they gave only under the residential. But the usage, the put to use, say I am using it today commercial, tomorrow I can change it to the residential. Yes or no? So therefore, only for the usages, I am paying electricity commercial and I am paying property tax. Tomorrow I can, at any point of time, I can convert into residential premises. But the approval, you see, the CMD approval and the concerned development authority, they gave approval only the residential building. It is not a commercial building. Therefore, I am taking the view it is only a residential premises. But there are other views saying that no, sir, we will not agree your view, it is only the commercial property. So it is here and there. So therefore, my view is, I express my view is it is only the residential property. Yes, sir? Yes.
The Tamil Nadu Electricity Board regulation permits advocates chartered accountants
Yes.
to use one room for functional purposes. So house is for residential use. One room is permitted for commercial.
See here there is a specific notification. It says that even if you use one room, it will be considered as a residence. It will be only for usage. Your entire building is not changing into commercial. Correct. Only for usages only you are paying electricity. For use, today you are occupying that building for business purpose. That is why you are getting the commercial rate all. Tomorrow, if you don't want to continue, then in such a situation it will be residential units. So therefore, my view is that you have to see the approval, whether the approval is for residential or whether the approval is for commercial. Suppose if it is a godown, it is only the commercial, correct. So the approval itself is commercial. Then in such a situation, it is only the commercial property. So this is my view, sir. There are other views. Even there are a lot of other professionals, they are not accepting my view. So, but my view is this one. Now we will come to the commercial property. Now the commercial property, there is a rent paid commercial property, 12 lakh rupees. So this residential property chargeable under RCM from 18/7/2022. 18/7/2022. Now we come to the commercial property. Rent paid to the registered person, correct? Sorry, rent paid by the registered person, correct? In the registered person books of accounts, rent paid to the owner who is unregistered, but it is a commercial property. Yes, sir? RCM. When? That is from 10/10/2024. So therefore you have to verify in your profit and loss accounts rent paid to registered person, whether it is a residential dwelling unit, rent paid to the commercial, rent paid to the owner, rent paid to the owner for the purpose of commercial. So that you have to, you have to verify. You have to take the breakup of rent, and accordingly you find out what are all the residential unit, what are all the commercial units, and also you have to examine whether it is more than 20 lakh rupees, less than 20 lakh rupees, and then whether the owner is registered or not. So now, if the owner is unregistered, yes, rent paid commercial property, we concluded that it is subject to RCM, yes, from 10/10/2024. Now, if he is a registered person, then what will happen? The owner is a registered, correct? XYZ Limited is also a registered person. Then in such a situation, what will happen? Then forward charge will come. So therefore, renting of residential dwelling unit, whether registered or unregistered, to a registered person is subject to RCM. Yes? Concluded, correct? Subject to RCM. If it is a commercial property, then you have to examine whether the owner is registered or not. If the owner is registered and discharging the liability, then no RCM is applicable. If the owner is not registered, then RCM is applicable. Then RCM is applicable. Yes? Any doubt? Residential. Say if you go through notification number 13/2017, serial number 5A, if my remembrance is right, it says renting of residential dwelling unit to a registered person is subject to RCM. It says supplier should be the any person, recipient is a registered person. So therefore supplier any person means even a registered or unregistered, they are the supplier. But if the recipient is a registered person, then in such a situation, the registered person is liable to pay under RCM. The registered person is liable to pay under RCM. So therefore, if it is a renting of residential dwelling unit to the registered person, please examine whether it is a residential dwelling unit. First point. Second point, whether it is let it out to the registered person. Yes, the registered person is liable to pay under RCM. But he can take the credit. According to me, he is eligible to claim the credit because this credit is related to carrying on the business. Therefore, my view is that you are eligible to take the credit. Yes, sir. For home purpose, you please refer, I think, notification number 12/2017. There is one exemption. It says, what is his point is, suppose the proprietor, he is paying the rent to the owner for his own residence, correct, for his own residence. But it will not be debited to the profit and loss account. It will be there in drawings account because it is not incurred for the purpose of business. It is his personal expenditure, correct. So it will be either in capital account or capital account only or drawings account only. So in such a situation, this is applicable, correct? In such a situation, this is applicable because there is a supply of services by a owner, correct, to the registered person. There is one exemption, it says that RCM is not applicable in case of a proprietorships concern if the proprietor pay it for his own resident purpose. So then in such a situation it is not applicable. Yes sir, got the point? I think you refer notification number 12 or 2017. There is one exemption. Yes sir. The next we will come to transport charges. Transport charges earlier 1500, 750, these are all basic exemption was available. Now no such a basic limit. Transport charges, even if it is 1 rupee, you are liable to pay under RCM. Therefore you have to examine what is the transport charges paid. In one case what happened, this is practically happened. What happened? The dealer, he purchased certain material. When he purchased certain material, the dealer normally what he did, sale of air conditioner 1 lakh rupees, transport charges 10,000 rupees. 1 lakh 10,000 rupees, GST at the rate of 28%. That's all over. So the goods received by the registered person. But the registered person, while booking these purchases, what he did, what he has to book, whether he has to book as an entire purchase or purchase differently, transport differently, separately. I will repeat my example. I am a dealer in air conditioner. I purchase an air conditioner from the wholesale dealer, correct? 1 lakh rupees sale of air conditioner 1 lakh, transport charges 10,000 rupees, lakh and 10,000 rupees, on which the supplier collected GST at the rate of 28%, 1 lakh 10, 28%, that's all. In such a situation, whether you will take 1 lakh 10 as a purchase or 1 lakh is purchase, 10,000 is your transport charges.
10,000 is transport charges and pay the dealer.
So you engage the transport, correct? You paid to the supplier or you paid to the transporter.
Pay to the supplier.
Then how can you say that it is a transport charges? For you, say he is charging the entire 1 lakh plus 10,000 rupees, correct? According to me, this 10,000 rupees is an expenses incurred while purchasing these goods, correct? So therefore, according to me, the entire 1 lakh plus 10,000 rupees is a purchase. But what the accountant did, he showed it as separately as a transport charges. Therefore, the department issued the notice saying that this much of transport charges you paid, correct? This much of transport charges you paid, you are liable to pay under RCM. You are liable to pay under RCM. Then I told him, sir, you paid to the lorry owner, so you please give me all the relevant documents. He gave me all the purchase invoices. He didn't pay any payment to the transporter. Once he didn't make any payment to the transporter, according to me, RCM is not applicable. Correct? According to me, RCM is not applicable. Then we have gone through the entire invoices and then found that there is some mistakes while passing an entry in the books of accounts. Therefore, we explained to the officer saying that, sir, we didn't engage any transport at all, first point. We didn't pay any transport charges to the lorry owner. It is not a freight charges. It is wrongly entered as a transport charges. And luckily that concerned officer, he agreed and he dropped the proceedings. He has shown the entire invoices. So therefore, how to book particular expenditure under the GST, that is also very important. So therefore, once there is a transport charges, you have to examine. Earlier we took a stand saying that no, sir, that is less than 1,500 rupees, therefore it is not subject to RCM. Or 750 rupees or less than 750, it is not subject to RCM. But those limits are removed. Those limits were removed. Therefore, from 18/7/2022, even if you incur 1 rupee transport charges, you are liable to pay under RCM. You are liable to pay under RCM. So therefore, you must be very careful. Now, yes, sir.
In the example given by you, cost of the AC machine is 1 lakh. It is liable for 28%.
Correct.
If you book separately as transport charges, maximum it is liable for 18% only.
Yes, sir.
Then he can split it into two or in the same invoice, 28% for AC machine and 18% for transport charges.
Yes, sir. Say, if 18,000, 10,000 rupees is separate for transport charges, means to whom you will pay? To the supplier you will pay or to the transporter you will pay? That is the first question.
But it is not for the AC machine.
Say, if say it is a composite supply, correct? Supply of air conditioner and transport is a composite supply, yes or no? Naturally bundled, yes or no?
Depends upon the invoice.
No. Say you cannot split the invoice, saying that for my convenience, so this is 18%, therefore I will show you separately, this is I will show you separately. So as long as the contract is one, you cannot split it two. That is my view. But the same transport charges is being invoiced by other person, then in such a situation the position is totally different. Suppose if it is being invoiced by a sister concern, then I will take totally different stand. But here the officer will raise a question saying that no, you have raised the transport charges, you have sold the air conditioner, both are composite supply, therefore the officer point of view also it is only one contract purchasing the air conditioner, therefore my view is it is subject to at 28%. Yes?
So this transport charges RCM 5% or?
Right. Transport charges, whether the RCM is at 5% or 12%, only 5 or 12. So therefore, in your invoice, if you are a transporter, if you are a goods transport agencies, in your invoice, if you say that the recipient is liable to pay tax, then the recipient will discharge the tax at the rate of 5%. Correct? I am the registered person. Correct? I am the registered person. I am getting you transport services from you. Whether you are registered or unregistered, I am subject to pay under RCM. Provided if your invoice says that, saying that it is only the recipient is liable to pay the tax under RCM, then I am liable to pay the tax. Suppose if the transporter opt for forward charge, then in such a situation also, he may opt for the same 5 and 12 also, he can opt for it. If it is 5% outward, 12% outward, then in such a situation, the transporter is eligible to take the credit in respect of that 12% items. He is eligible. That 5% will be considered as an exempt supply. 5% will be considered as an exempt supply. So therefore, you have to see your invoice, whether the RCM is liability is on the recipient or whether the transporter opted for forward mechanism. If the transporter already opted for forward mechanism, then in such a situation, he will charge you at 5% or 12%, no doubt, and accordingly you have to discharge a liability. And you are eligible to claim the credit subject to the conditions specified in section 17 and as well as rule 42 and 43, which you have to examine. Yes, sir? Yes.
If I engage a roadside fund or
Yes.
has it come under the
Yes,
definition
yes. Very difficult to prove, but my view is it is not subject to RCM because it is not a GTA. GTA means goods transport agency. The goods transport agency, they have to take the responsibility of the goods and they have to issue the consignment note. Then only it is a GTA. But in your case, யாரோ ஒரு வெளில ஒருத்தர் நின்றுட்டு இருப்பார், திடீர்னு அவரை விட்டு இந்த இடத்துல கொண்டு போய் இறக்குங்கன்னு சொன்னீங்க அப்படின்னால், according to me that is not a GTA because the responsibility is on you in respect of the goods. Correct? It is not on the person who transport the goods. Therefore my view is that it is, but the department they are not accepting it. They are not accepting it. They need more proof. You have to fight lot, no doubt about it. Yes, sir. Depreciation. Sir, depreciation, it is only air conditioner. Correct, sir? It is like computer, printing and machinery, etc. So therefore, if you capitalize the entire lakh and 18,000 rupees in your books of accounts, then you are not eligible for ITC. Therefore, you have to capitalize only 1 lakh rupees, 18,000 rupees you have to claim it as ITC. Next, disposal of the capital assets. Next. So, river charge mechanism, we have examined legal expenses, correct, and then transport charges. Then we also examine renting of your property, correct, renting of commercial property, renting of a residential property, which we have discussed. Now we will go through the provisions, important provisions. Sale of a capital assets. Sale of a capital is already capitalized in my books of accounts. The same air conditioner I purchased 5 years back. Now I am selling it. Now I am selling it. So I purchased for 5 lakh rupees, correct? And today the WDV value is 1 lakh rupees. I sold it for 1,15,000 rupees. I sold it for 1,15,000 rupees. Then in such situations, what I have to do? Whether I am liable to pay GST, yes or no? Yes or no? Yes, I am liable to pay the GST. Because there is a supply, correct? If you go through section 7, 7 talks about supply in an inclusive manner. It includes, it will start, it includes sale, transfer, barter, exchange, rental, lease, license for a consideration, correct? In the course or furtherance of a business. So therefore these two conditions are very important. There should be a consideration and it must be in the course or furtherance of a business. So therefore the sale of air conditioner, according to me, it is subject to the GST. But your WDV value is this much, correct? You have already taken the credit also. 5 years you have taken the credit, yes or no? You have taken the credit. Yes, you have taken the credit. Then in such situations, what Act says, what is the transaction value? The transaction value is 1 lakh rupees. I sold it for 1 lakh rupees. 1 lakh rupees at the rate of 28%. The air conditioner rate is 28%. 1 lakh rupees, 28%, 28,000 rupees. That is the value, correct? And the second is, what the input tax credit for the 5 years. So you are selling it in the 3rd year or 4th year. Then in such a situation, the remaining year is 1 year, correct? That 1 year credit, correct? Whichever is higher, that you ought to adopt, on which you are liable to pay the tax. On which you are liable to pay the tax. So therefore, in respect of sale of capital assets, I request you to kindly go through section 18.6 and as well as rule 40 and rule 44. Yes, rule 40 and rule 44. That is in respect of disposal of assets. Then the next is 180 days. Same example. Yes. Say I purchased a air conditioner 3 years back. Now I am selling it. I purchased it for 1 lakh rupees. Correct? I purchased it 1 lakh rupees. Am I eligible to claim the credit? Yes or no? I am eligible to claim the credit. My view is I am eligible to claim the credit. I took a credit. The credit is available. The life is only for 5 years for capital asset, according to the GST law. So therefore 2 years not utilized, correct? So therefore the 2 years credit you have to take into consideration. And then what is the value you are selling? You are selling 1 lakh rupees. 1 lakh rupees at the rate of 28%, your outward supply tax is 28,000 rupees. What is the available credit? That is assuming that is 16,000 rupees. Then you are liable to pay, whichever is higher, you are liable to pay 28,000 rupees. Yes, you are liable to pay 28,000 rupees. That is very important. In respect of capital assets, I have covered and we will check it out. So avoid more reconciliation. We have missed out supply. Sometime what will happen, sir? For 10 invoices we missed it. We found only at the time of, not only at the time of finalizing the accounts, but at the time of filing our annual return. What we do? Correct? Sometimes what happened, in number of cases, the GSTR1, GSTR3B figure more than the audited financial statements. Auditor also misread. This will happen sometimes, we don't know. I have seen 2 or 3 cases. Auditor misread. One particular branch they have misread, but small branch. Sir, I recognize the presence of my guru TG Suresh sir, who taught me income tax, cost accounts, financial accounts. Thanks. The next speaker. So what we discussed, outward supply. So sometime what happened? So your books of accounts, the turnover is less, whereas the turnover as per GSTR3B and GSTR1 is more. That we discussed it. Sometimes what will happen? The auditor missed the turnover while preparing the financials. This has happened in one case. One small branch they missed it. But they have filed it GSTR1, GSTR3B correctly. What is the solutions which you have to do? This is one small branch. They started only in the month of December 2023. to 3 months turnover they have missed it. Then in such a situation you have to discharge your GST liability. According to me, you have already filed the return GSTR1 and GSTR3 return. You have to discharge your GST liability. When it comes for financials, I think the auditor is responsible and he has to explain. Yes, sir. So this is also happened in a number of cases. Missed out. Other income which we have discussed, interest stock transfer also we have discussed. And that very important is GSTR 3B and GSTR 2B reconciliation is very important. In sometimes what happened, sir, it is not at all appearing in my GSTR 2B, but I supplied in the month of November 2024. Still date it is not appearing. I paid the tax to him, yes, and I paid the entire consideration to him, yes. Now in the month of March 2025, what I have to do? Yes or no? What you will do? You have to follow up with the client, yes or no? That in such a situations, whether I can take the credit. But the section 16 says very clearly, no, it should be reflected in GSTR 2B, yes or no? So therefore it is not being reflected as on today. How can I take the credit? So this is very important. Then you have to follow up in the month of February or March 2025. What are all the items on which you have purchased but it is not appearing in GSTR 2B? And then do the reconciliations. You have to find out who is the vendor, whether he has paid it or not. In number of cases what happened, instead of B2B, he filed it in B2C. So you have to ask him to reverse into B2B or you get a certificate from him, he has already discharged the tax, and accordingly you take the ITC and then litigate it. So you have no other choice, you have to litigate it. Yes, classification is also very important. So normally what we will do, whether the rate of tax is correct or not in the invoice, that also you have to find out. Whether the classification is properly done by the managements. You have to ask him, sir, why it is 18%, why it is not 28%, whether the classification is correct or not, that you have to examine, and accordingly you have to ask the management some note, sir, how you come to the conclusion it is only liable at 18% or 28%. The classification is very important. The classification is very important. In respect of imported goods, what happened number of times? In respect of imported goods, number of times what happened? Yes. In respect of imported goods, what happened? Imported goods, you are eligible to claim the credit based on your bill of entry. Yes or no? Sometime what will happen? The bill of whatever the bill of entry, you have paid the tax. It is not being properly reflected in GSTR 2B. In such a situation, you please take the credit. Please take the credit, and you also produce this GSTR, produce a bill of entry form, and accordingly you take the credit. Yes or no? Yes, you are eligible to claim the credit. It is not being reflected even though you paid the IGST while importing the goods. So these are all my observations in respect of what you have to do while finalizing the accounts. I request you all, please do it in the month of March 2025 itself. You please do all it so that your reconciliations will come down. So thank you for your opportunity. Thank you, sir. Any question I am returned?
You touch upon payments not made within
180 days, yes. So if the payment is not made 180 days, you have to reverse the credit. You have to reverse the credit. And then once a payment is made, you are eligible to claim the credit. You are eligible to claim the credit. In respect of 194R, sir, Act require me to deduct TDS under sections 194R. First, I have to examine whether it is a supply or not. If it is a supply, so just because everything is credited to the profit and loss account, all are subject to GST. I will not agree. Whether it is a supply or not under the GST law, which you have to examine. If it is a supply, then only you are liable to pay under GST. Otherwise, you are not liable to pay under GST. 194R talks about perquisites or other benefit is received. Whether it is connected to your supply. If it is connected to your supply and it responds to your supply or inducement of your supply, then in such situations I will take a stand that is subject to GST. Otherwise, my view is that it is not subject to the GST. So that you have to examine for each and every facts. Any other question, sir?
Can you please dwell upon RCM and works contract?
Works contract, no RCM at all, sir.
Building repairs.
And building repairs also no RCM, sir. No RCM at all. Building repair, no RCM. Works contract. Building construction. Building construction also no RCM, sir. RCM is only 14-15 items which is specified in notification number 13/2017. Yes. Whether you have to pay the interest or not. So you have to exactly, if you reverse it within 180 days, then there is no issue at all. But if you have not done it, if you are doing it after 360 days or after 1 year, then in such a situation, the department will ask you the interest. If you reverse it within the time period, no problem at all.
9C is compulsory for whom?
9C is compulsory only for those whose aggregate turnover is more than 5 crores. Sir, any other question? Thank you, sir. Thank you for all of your passion. Thank you.
We hope the session was interactive with deeper understanding of GST compliances. We deeply value your time and effort in sharing your knowledge with us, sir. Your session was not only informative but also an eye-opener for many professionals navigating GST challenges practically. A special thanks to our SIRC Chairperson CA Revati S. Raghunathan, Secretary CA Deepa Varghese, and also to the Committee on Financial Markets and Investors Protection for their leadership and support in making this event possible. I request Chairperson to present a memento to CA Subramanian as a token of appreciation. I also request CA TG Suresh to occupy the dais. I request Chairperson to present a memento to CA TG Suresh as a gesture of gratitude and respect. I request Chairperson to address the gathering, ma'am.
Yeah, 2 minutes. Yes. So, a very warm good evening to the two speakers here, Subramanian sir and TG Suresh sir. At SIRC, we want to do some slightly innovative programs. I know we work within the boundaries of whatever is allowed to us, but we wanted to do something different in that also. So we came up with this, sir only, TGS sir only suggested ready, set, comply, because we know that, March 31st, all of us are struggling to advise all our clients about various aspects, the compliances which are need, what we have to fulfill. So we thought, even though we cannot give you a checklist, we can ask the experienced chartered accountants to tell us what are the pain points which will hit us after April. So if we get ready for those pain points, we will be able to actually meet everything with compliance. So that was the idea of actually organizing such a program, and we have actually made it open to all, including the general public also, and there are some people who have come who will be taking inputs from the experts here. And I'm also happy to say that this program was recorded also by Dinamalar. A few minutes was recorded on Dinamalar, and they'll be recording even TGS's a few minutes, and they will be telecasting it live. We want to promote brand SIRC and say that we are there to the public for any taxation, any audit, any accounts, any of the compliances which are need to be done. We are a pool of professionals who are available here at this premises. You can reach out to us for anything, and this is the beginning to that. I want to thank both the faculties here who immediately agreed to come and address, and pair chootrunadu kuda TJS sir. I told him, sir, I want something very catchy to attract people to come, and sir was kind enough to give a few suggestions, and we picked on one of them. So I'm very happy to see everyone here. Please do join us. Unless and until you come, we will not be encouraged to conduct such programs. Even in April, we have a number of programs which are planned. We are going to have some deep dive sessions where you go dive deep into the cases, the case laws, and then we are going to have some moot courts on ITAT, GST, as well as insolvency professionals. We are going to invite senior advocates, senior ITAT members who may have retired or current, and also sitting members, technical members or judicial members of NCLT. We are planning in the near future a GST conclave in ECR, and we are clubbing it along with some lighter activity like cruise on the Muthukadu lakes, which has been organized. We are going to combine both the work-life balance as well as the knowledge sessions together. Our conference will most likely, we have not yet finalized the dates, be sometime in August. We are going to include some sports activities also in the conference this year, and apart from that, we are having every month something totally different planned. We have one CPA session which will be clubbed along with another branch in another state with a trek to the Agasthyar Hills. For that, we are waiting for the government approval. The number of participants will be limited to the number of approvals that we get. We are trying to make it a CPE program so that we can kill two birds with one stone. Have the trek, fun in the trek, as well as get the CPE. CPE will be most likely in the Trivandrum branch, and everything else will be done as per the government norms, because the government is the one which actually approves, and also the entire trek is planned according to the government's regulations only. And similarly, we have one more bigger cruise program which is planned, and also one international program, and all our CPE programs are going to be extremely innovative. Every Wednesday we are having every month one Wednesday we are going to have a wow Wednesday, which is ideate and innovate, where we are going to talk about opportunities in different areas, niche areas also, where we want youngsters also to come and participate in these programs as speakers, as knowledge givers, whatever, share your experience, something totally different. We want to reach out to more members, and if the senior members can come and share their experiences in doing a particular type of audit which is totally different, like an oil company, how did you do the audit, how do you do the internal audit of such companies. So these are the types of programs which we want to do on Wednesdays. We have a lot more in store. Apart from that, we are also trying to negotiate for some types of we can only just make a start trying to negotiate for some assignments for our members in whatever we are upskilling ourselves, but that is all in very nascent stage. But this is all just to kindle your interest to keep engaging with us at SIRC. Only if you engage will we be encouraged to actually perform better. So thank you very much everyone for coming here today. Thanks a lot, sirs, for coming, and TGS sir especially for giving us this nice and vibrant naming of this program. Thanks a lot. Thank you.
Thank you, ma'am. Thank you for sharing with us the upcoming exciting programs to be conducted by ICIRC.